The Bank of England have raised their rates again to 4.25%. Is this the end of property investment? There's been a lot going on in the property market over the last few months, especially with Zoopla predicting 5% drops in 2023, Jones Lang LaSalle and Lloyd's predicting between 6 and 8%. And any of those sort of predictions, we don't know if they're going to come true or not, because each time something changes, it allows the impact. For example, in February, what we were predicting and the Bank of England were predicting is a really shallow recession, which is good news. As of March, even better news that there won't be a recession at all. But what are the actual key metrics that we need to look at, and is investing still a good idea? So the first thing to be thinking about is the levels of property. So let's think about how we're actually making money in property. Well, first of all, we've got capital growth. Now, capital growth, and I'm starting with the most important one right now, is the maximizer effect of property. So if we've got this property, let's face it, not exactly an artist, but we've got this property here, and let's say it's worth 200,000. Now, if you know the long-term capital growth rate or capital appreciation, it's around 7.9%. But to be conservative, let's say long-term it's 5%, which is very conservative, by the way. And no, that's not going to be every year. Sometimes it goes up, sometimes it goes down, sometimes it's stagnant. But in general, about 1,000 years of evidence is going to be about 5% plus, all right? So when you've actually got this, you need to think, normally you're going to get a 75% loan to value mortgage on that. Now, this is not a breakdown of property investment and stuff like that. So I'm going to go over these figures relatively quickly. That means you are going to have to put in a deposit of 50,000. You're going to have about, let's say, 6K in stamp duty. And then let's say you've probably got, let's say 14,000 to make the numbers easy in refurb plus fees, adding that up to the 14K. So your cash involved in this is going to be £70,000. Why is that important? Well, when you've got capital growth, unlike everything else, like the rental increases, it's not 5% based on what you've put in the property. It's based on the overall asset value. What that means is every single year, you are going to increase your net wealth on average £10,000 every single year, which is 5% of the 200,000. So when you're looking at your return on capital employed, ROCE, you're going to factor in your net wealth increase, which is going to be 10,000 divided by the 70,000. As a decimal is going to be 0.1428, give or take, which means 14.28%. That's without your actual rent coming in. So capital growth is a really important way of making money. Next, you've obviously got your rent. Now, your rent, let's say on a £200,000 property, is going to be about 1,250. Or if we times that by 12 to give you the year, it's going to be £15,000. In general, you can pretty much slash that in half. And with interest rates going off, I'd probably take around 10 grand. Again, this is just very rough estimations. That is going to be your mortgage, your management, and of course your maintenance, or anything else that needs to come out. So give or take, your profit is going to be £5,000. So if we know that £10,000 is giving us a 14.28% return, we know that this is going to be a 7.14% return. So as you can see, this is a nice healthy profit as a ROCE from the rent, but most of it is coming from that capital growth part, together giving easily a double-digit return. So why is this important with what's going on in the market now? Well, if, for example, the property values are predicted to go down slightly, which was anything between 3 and 8% based on a lot of professional opinions, how does that actually impact things? Well, this is where it gets quite interesting. And where maybe you want to listen. So first of all, your capital growth. Capital growth obviously goes into a negative state. Now, is that a good thing or a bad thing? Well, it's not good if you are doing something like a flip or you're buying something to sell quickly. So anything that you're looking to offload in the next 6 to 18 months, I would say maybe you want to adapt your strategy slightly, because if you're going to buy something today for 100,000, you know it's going to need 20,000 spent on it for the refurbishment, very rough figures, and you're intending on selling it for 150,000, very rough figures, so you're going to make 30 grand profit. Again, I know there's other costs in there, just as an example, but it falls by, I don't know, let's say 8% of that. Well, if we divide this by 1,500, and then times that by 8, that's going to be £12,000. So if you've not followed my maths there, 8% of 150,000 is £12,000. So you're not going to make that 30 grand anymore. You're now going to make £18,000 profit. All right. So yes, it's still good, but if you actually take account of the real costs there, you're probably going from about £20,000 profit down to £8,000 profit. That for me is not a lot of movement that I want to take account of. So does that mean don't buy property? No. And here's why. And here's what people seem to really miss. So first of all, when we're talking about the overall economy, we're talking about a very generalist point of view. And that's going from some areas where property prices are £30,000, which, yes, there are still areas there, all the way up to the £50 million properties in London. And yes, there are many properties at that level. Well, let's look at a few indicators here. First of all, the people buying these properties here are mainly starter level investors. You cannot get mortgages here, okay? So this is going to be a lower level cash investor. And by the way, my personal opinion is I don't go anywhere near these types of properties. Now, when we're looking at the upper side of this, who typically is buying these? Well, actually, it's going to be a lot of foreign investors, and one of the biggest is Russia. And hopefully it goes without saying, Russia ain't buying a lot right now. So the reason I give this analogy is if you think about a tree, where is impacted most on a tree when the wind blows, when there's a strong breeze? Is it the trunk? No. Okay, is it here? No. It's usually the loose leaves around it. Okay, and so yes, there are going to be some people at this level, homeowners, that gets really impacted by this, and it's the people at the higher end of the market. Yes, you've got the trophy level housing, but actually, really when you're looking at £500,000 properties, and that sort of middle class lifestyle, these are the property prices that get impacted the most. Really important is that when you are investing in this area, okay, which is the buy to let level, which in my area is the 120 to 170,000 pound properties. In your area, it might be slightly different. What you are probably finding is that actually it's still really difficult to get a property because all of the demand is squeezed in this area. And that's for a couple of reasons. Number one, the really cheap property becomes less desirable because it's no longer leverageable by a mortgage. And all of the people that could afford here that no longer can from a homeowner point of view, instead of going into renting, what they're looking to do is carry on buying here. So whilst the market forces are trying to slow down inflation, we've got this forced inflation by the increased demand going on here. Okay, and the only thing that can really stop that is by huge development, which I'm not going to be going into right now, but the government is making it incredibly difficult for new development in the UK. But something else happens as well. So when you've got this middle class tranche of people in the £500,000 houses, what normally happens is they do not end up selling up to then go buy a £350,000 house. What they end up doing is they sell their house and they go into rents. The problem is most of the rental stock is in this tree trunk territory here, which, as I said, in mine is 150 to 170,000. Now, what happens when the rent goes up is that people can spend more on the purchase price of a property. So hear me out here. If I am willing to buy a buy-to-let, making up these numbers, all right? If I'm willing to buy a buy-to-let at 140,000 because the rent is at £800, but now because of the increased demand in rent, it means more people wanting to rent my property. So now I'm able to increase it to £900. How much would I be willing to buy that property for? Maybe 145, maybe 150. And so what most of you will be feeling in this area of the market is probably going, well, where's this slowdown? Where's the recession for me? And the thing is, good or bad, is probably not coming. Now, the reason why I've done this video in particular is I think if you're watching this as a general overview, I do believe that by the end of 2023, we are going to see a 3 to 8% drop. However, what do I think we are going to see as investors in the boring, vanilla, buy-to-let territory? I actually think we'll start to see a bit of stagnation and then actually growth after. I think we're going to see capital growth of between probably 4 and I'll probably say 4% by the end of the year in these sectors. I also think we're going to see a rent increase by up to 15%. And we're already seeing that. We're already up 12%, but I think there'll be a little fluctuation down and then another peak up. Now, the reason this video hopefully is important, and will probably invite a load of comments like rubbish and all of that, is when you look at the country overall and you make generalized statements, you will end up coming to generalized outcomes. But actually, if you're intelligent, and you'd stop asking questions like, is buy-to-let a good idea? Is property a good idea? Because the answer is always going to be yes. What do you think's going to happen? Do you think we're going to go into a recession and suddenly people don't need a roof over their head? No, that's just not going to happen. The fundamentals are there. There are not enough properties in the UK for people to live in. When there is more demand than supply, prices go up. So instead of looking at the overall tree, look at the leaves, look at the trunk, look at the branches, and focus your time and energy in the most stable part, which is the tree trunk of your area. And when you do that, you are going to be able to get better and better locations. So the benefit of investing in property right now is this tree trunk perfect section would be here. And actually over the last couple of years, because it's been so difficult, we've probably had to end up operating here and getting lucky to get anything here. But because of these changes in market conditions, I think we're going to see great opportunity to get some really amazing, fundamentally strong properties over the long term. But hey, that's just my opinion. Let me know what you think in the comments. And by the way, if you are watching this and you know you want to get in property and find these tree trunk properties, never used that analogy before in my life, by the way, then, and maybe you don't have the time or experience, that's where we come in. So if you've got 100,000 or more and you're looking to build your portfolio, but you want to use my team, my time, my experience in helping you do that, just put APG in the comments and we'll have a one-to-one strategy session to make sure it's the right time for you. Otherwise, I'll put a link in the description, click on it, fill in the details, and we'll have a chat. So to summarize, as I like to say, and it's not my quote, it's not about timing the market, it's about time in the market. And I think it's Warren Buffett that originally said this, that time in the market will always be timing the market. And if the world's experts can't all agree on a percentage for the 26 point something million properties out there, then why are you? So instead of focusing on the economy, focus on your economy and the difference you can make. So hopefully you got value from this video. If you did, make sure to leave a comment. And if you're new to the channel, make sure to hit the subscribe and the notification bell. I'll see you in the next video. But before you go, just make sure to destroy the like button.